Welcome, ladies and gentlemen, to the Newsflash at Commodity TV with Fiore Gold, Royal Nickel, IsoEnergy and Skeena Resources. Fiore Gold announced their preliminary production results for the second fiscal quarter 2020 for their Pan open pit mine in White Pine County in Nevada. The Q2 gold production was 12,085 ounces, representing a production record for the Pan mine and a 38% increase compared to Q1 2020 fiscal. The gold sales stood at 12,026 ounces at an average realized price of $1,576 per ounce. The sales are all unhedged. The closing cash balance, and that's really important, is at $9.1 million, representing an increase of $2.6 million relative to the last reported cash from 31st December 2019. Fiore also released the results of a preliminary economic assessment, a PEA, demonstrating positive economics for the Gold Rock project with opportunities to further enhance the value. The PEA showed a pre-tax NPV at 5% of $49.7 million and a 22.8% IRR at a base case gold price of $1,400 per ounce with a life of mine cash flow of $77.2 million. Based on a sensitivity analysis at approximately the current spot price of $1,600, we know it's already higher, per ounce gold, the project returns a pre-tax NPV at 5% of $106.8 million and a 39.7% IRR with a life of mine cash flow of $149 million. The updated resource estimate shows a 69% increase in indicated resource to 403,000 gold ounces, in addition to the inferred resource of 84,300 gold ounces, with excellent potential to grow the resource with next phase of planned drilling. The mine life is 6.5 years with a total gold production of 362,750 ounces, averaging 55,800 ounces annually. The life of mine all-in sustaining cost, the AISC, are $1,008 per ounce gold, and I'm quite sure we can get this below the 1,000. That's my personal estimate. Pre-production capital expenditures are around $65 million and could be partially financed out of the existing cash flow and, of course, a project finance. Royal Nickel Corporation received the approval of the Toronto Stock Exchange for a normal course issuer bid to purchase up to more than 30.4 million shares of their issued and outstanding common shares. The purchases under the bid may commence on 17th April 2020. The bid will expire no later than 16th April 2021. The price that the company will pay for any common shares purchased under the bid will be the prevailing market price at the time of purchase, of course. Any common shares purchased, and that's really important, by the company will be cancelled. The bid represents 5% of the common shares issued and outstanding. Corvus Gold continued to expand their main zone with 42.7 meters and 1.98 grams gold per ton and 47 meters at 1.47 grams gold per ton at the Mother Lode deposit in Nevada. RC drilling into and through the CIZ zone continues to be challenging, but drilling to date has now confirmed the continuity of the CIZ over a strike length of 600 meters and to a depth of 200 meters down dip. In addition, a new diamond core hole recently completed through the CIZ with results pending has shown the zone is much wider than the single dike intercepted by the RC drilling, but expands for at least 150 meters in width north of the historic pit. The company began the year fully funded for the 2020 and 21 work programs with 21 million Canadian dollars cash as of January 2020. 85% of that held in US dollars. Corvus project works continues on schedule and on budget with the implementation of the Corvus COVID-19 procedures and in full compliance with requirements enacted by the state of Nevada. IsoEnergy reported final assay results from the winter 2020 drilling program at the Hurricane Zone. Discovered in 2018 at the La Roque East property, the Hurricane Zone is a recent discovery of high-grade uranium mineralization. The company showed again fantastic high-grade results like the drill hole LE2052 with an average of 22.7% U3O8 over 7.5 meters, including 67% U3O8 over 2.5 meters, or drill hole LE2053 with an average of 11.7% U3O8 over 10.5 meters, including over 40% over 3 meters. Craig Perry, CEO, said, "Drilling has continued to deliver long intervals of high-grade pitch-blende uranium mineralization, confirming Hurricane as a major discovery. It is worth noting that the Hurricane deposit is in an exceptional location in the eastern Athabasca, close to key infrastructure and only 40 kilometers from Orano's McLean Lakeman. In recent days, we have seen the major producers announce extended closures of their mines and mills, which we estimate has reduced global uranium production volumes by over 50%. Already we have seen the uranium spot price rise over 30% from $24 per pound 3 weeks ago to $31.50, now over $32 today. Breaking the important psychological barrier of $30 per pound is in the process. This rise has occurred without the full impact of physical product being removed from the market, and when these announced supply cuts take full effect in coming weeks, we expect to see further upward pressure on prices. Against this backdrop, IsoEnergy remains well positioned with $3.5 million in cash, and we look forward to reporting on plans for further drilling at our high-grade Hurricane discovery. So that said, CEO Craig Perry. Skeena Resources reported a successful closing of the second and final tranche of the non-broker private placement offering announced on 10th March 2020. Together with the first tranche, Skeena raised gross proceeds of 33.3 million Canadian dollars and is now very well financed. The company can work now fully on their exciting projects without any financial constraints. Even in those times, we see good news on all fronts in the mining sector, and we keep you updated. Thanks for watching us, stay healthy, and bye-bye from Switzerland.